Welcome back. Markets this morning are higher. Take a look. We are about an hour away from the opening bell for a Thursday. Dow Industrials right now up 41, the S&P up 15, and the Nasdaq higher by 63. Investors are weighing market valuation concerns and growing volatility in AI stocks. Top bank CEOs also warning of a potential market correction as big short investor Michael Burry reveals he is betting against the AI boom, in particular Palantir and NVIDIA. Joining me right now is the Miller Family Office Portfolio Manager, John Spallanzani, with us here on these markets. John, great to see you.
Hey, good seeing you again.
Thank you so much for being here. So what are you looking at as most important in terms of driving your decisions on your portfolio, on the Miller portfolio?
Well, I think we don't do a lot of trading, as you know. Our biggest positions are obviously Amazon, Bitcoin, Clear Secure, which reported this morning, had a good quarter, and obviously some legacy Googles, Metas, that kind of thing. But you know, right now it's very interesting markets, right? You have Michael Burry saying he's buying puts. You have some CEOs warning about bubble trouble. You have people worrying about lots of different things. SCOTUS, obviously, on the forefront right now with the decision about tariffs. We had Challenger came out this morning, layoffs the highest in 20 years, which I thought was a big number, especially because it's coming from technology, which is AI affected, as well as warehousing, which is robotics. So we have these two big mega trends. AI, robotics, drones, all that kind of stuff kind of taking over the world right now, as well as the U.S. And there's this arms race, really, for technology. And the technology arms race is driving all the data centers, all the chips, all the demand, where people are putting, you know, $1.5 trillion, $3 trillion, you know, huge numbers on what the CapEx is going to be. And we see that really, you know, Mag 7 is obviously where all the money is going, but the revenues are there. You know, their revenues increase because of the CapEx that's going, you know, CapEx per revenue, per share has been really ramping up. So earnings have been actually better than expected, than a lot of people expected. So we had a valuation-driven market last year, and this year we're starting to see the earnings. And we also have the, you know, the big beautiful bill that really hasn't even hit yet, because we're going to see a lot of tax breaks coming in the early part of next year. We have a compliant Fed, we'll say, where they are in an easing mode. So that's positive as well. But again, we're all flying blind because we don't have a lot of data. So that's why we have to have anecdotal data like we had this morning with Challenger Gray.
Yeah, I want to get back to the Challenger cuts. Most October layoffs in over 20 years. But let me stay on this Supreme Court hearing and the arguments on President Trump's tariff authority. Get your take there. If, in fact, the SCOTUS goes against President Trump, Jameson Greer just joined me and talked a bit about some of the backup plans and the fact that a lot of the tariffs put in place already are not even part of this SCOTUS hearing. But if we actually do see the Supreme Court hearing arguments and result in going against the president, do you expect that there will be a market sell-off? Will investors react to that?
Well, it depends how exactly they're going to unroll the tariffs, I think. So that's the biggest thing. And I think Amy Coney Barrett and Judge Gorsuch yesterday actually were kind of questioning along the lines, okay, well, if this isn't going to work, how are we going to get the money back? Yeah. How are we going to refund all this money to all these different entities? So that's obviously, you know, going to do it across the board, you know, how that's going to work. So will it be a market sell-off? You know, market doesn't like uncertainty. We'll have to see what the decision is going to be. It's probably not going to be for a few weeks, so we'll have a little bit of time. We might even have, you know, another Fed cut, or who knows, you know, especially with the Challenger layoffs, the way they're coming. So that's big. I think the market, you know, the elections were interesting just because the market likes split government, right? So we saw the odds of the Republicans losing the House next year go up to 70% of losing. So
wow.
That is
because of the Tuesday elections.
Because of the Tuesday elections, yes. So market likes, you know, gridlock. Really, the 37 days that we're in the shutdown hasn't had too much effect yet. But again, you know, we'll have to see how it plays out.
The Challenger report, the U.S. has most October layoffs in over 20 years on AI and cost cuts. The job cuts attributed to AI adoption. Mm-hmm. Isn't this interesting? And we've been talking about this. Obviously, AI will mean lower jobs, but it's also going to create jobs that we don't know that we needed. But what do you think the backdrop looks like to you right now? You've got this Challenger report on jobs. You've got, you know, questions on other economic data, because the government's closed and we don't have any data.
Yeah, I mean, basically right now we're getting CPI and inflation data and some jobs reports. And again, this report. So those are the two basic things that the Fed has to worry about, that they're not getting a clear signal.
Does that give you a good picture of where we are in the macro story?
The macro story, I mean, we watch markets, so I'm watching the bond market, I'm watching 2 years, I'm seeing how they're trading. They're basically just been really range bound, waiting, obviously the Fed said that December's kind of, 50-50. We'll see what they'll do and how that'll work out. But, some companies are using the AI story to also lay off. So we see,
great point.
Yeah, exactly. So it's not just AI specific, they're using that as an excuse to cut jobs as well. And the Fed, how long could they stand by and not do as much as they need to do? Again, the yield curve's inverted. Fed funds is still above 2 years, and they have to get that rate down. So I think, going into next year, the Fed's going to be much more dovish, as you know, as the makeup changes.
Yeah, that's a great point.
Yeah, we might even have Rick Reeder or another.
We don't know. President Trump hasn't told us, but
Exactly.
Scott Bessent said we may know by the end of the year.
Yeah, which would be very
who the new chairman of the Fed
interesting, yes.
will be. We just looked at the 10-year, and the 10-year today down 3 basis points,
Yep.
sitting at a level of 4.1%. You are expecting another cut from the Fed in December or not? What's your take on rates?
Yeah, I think the Fed will continue to cut, whether they cut in December or not. They're gonna have to cut eventually more than just 25. I feel, especially if we see these, the job numbers really deteriorate. So I think they're waiting to see that. Again, the government shut down. They haven't been able to see that, but I think that if we do see that, then they'll go a little bit more aggressive, just because they will have the room to cut that we're not seeing right now.
So 2026, how are you feeling about markets and the macro story going into 2026?
I mean, we could have a correction tomorrow. We could have some exogenous effect, but I think right now, again, earnings are good. The Fed is good. We have the big, beautiful bill that's going to hit next year. The makeup of the Fed is also good. We have gridlock, which is good. So right now, things are positive.
All right, we will leave it there. John, great to get your take.
Great seeing you.
Always a pleasure. John Spallanzani joining us. Stay with us. We'll be right back.